Today is July 30th, 2022. We always start with our disclaimer, go over our calls, make some predictions. The weekends when we take a look at the longer term picture. It's my trading plan for Monday, which is August the 1st. Remember, I can be completely wrong, and any trade you make should be at your own risk. Look for the pattern with the early low, which this is. Monday, we're also looking for a pattern with the early low. We had a target, 4,941. Futures were already higher. I said there was a good chance it wouldn't print, and it didn't. But we do get to cross two old targets off the list, 4109.37 from the 9th of June and 4127.60, which I had written as 4127.40 for some reason. I write these numbers in a few places, and the one I showed on Thursday had a 40 cents instead of 60 cents, but both of them printed, and there's support resistance at that price. You can see the same thing at this price too. So we get to cross two of these targets off the list. So we've added one, eliminated two. That's a net gain for the system. The next higher unsatisfied target from the past was from just about 3 months ago, 42.1350. I think before this leg is over, there's a good chance we see that price. And we have a new target for Monday, 41.1593. And unless we gap up smartly, that's my call. We had an ultimate buy signal early in the day, and we got enough to satisfy it here. Usually you get more, and so we did. This is the daily chart. This is a bar completely over the upper Bollinger Band. It's almost completely. It's not a time when I look for new entries on the long side as a rule. Doesn't mean we have to drop Monday, but it's a sign that we're overextended. The VIX, the volatility index, is also slightly under its lower Bollinger Band. When the reverses through it, it gives a sell. So even though I think this is a positive long-term picture from here, as far as Monday is concerned, we're pretty overextended and we could drop, especially with our lower target. Doesn't mean we have to close lower, but I think there's a good chance that number's going to print. This is a review of what we said, and these are the patterns I'm looking to see next week. Well, this is my long-term count, and I'm now assuming we've completed wave C, green C, which is close to a 38.2% retrace of this last rally leg. I'm going to focus in on these last few legs, waves. We're counting this as an A, a B, and a C, with C equal to A. There are a number of reasons for this. One is we had sentiment readings at this low, which in the past have only been seen at major market lows. The other is that bear market rallies tend to be violent and brief, and this is a bit too long for me, and it didn't start out violently enough for me. I think it's the start of a new bull. Frankly, I had looked for a longer, deeper drop than we got, but that's why I take things a day at a time. Now, if this is the right count, we should be in wave 3, and I don't see 5 waves up, so that wave's not over. It doesn't mean that we have to go straight up, but it means we have more to go. Now, the next MEJT target was an ultimate target of 42 1350. And if that's around where we stop, and usually we go a bit past the target, if that's where we stop, there's resistance over that price, then wave 3 and wave 1 would be related by the Fibonacci ratio of 1.618. So it's one of the targets. I'm certain it's not the only one. But the low 4200s, I think, is a reasonable place for this to go before it's through. That doesn't mean we have to go up on Monday. If you count from the low here, you can count this as 5 waves up for 1, and that's a 2. And we now should be in a third wave of multiple degree. So there's 1, there's 2, and that's wave 3. But let's focus in on this wave 3. I don't think the whole wave 3 leg is complete. But at this point, it's possible to count 5 waves up and the fibs are good. You have this channel and the market's railing but unable to clear the 50% level of the channel. It has no trouble hitting the lower end of the channel, but it's falling a bit short of the upper end. These are all signs that we're running out of steam. And I think there's a good chance that this channel breaks. Now we shouldn't really violate any of these. If this is a wave 3, we shouldn't violate this high of wave 1, so it's not going to be a disaster. And on the longer term, if this is the right idea, we shouldn't violate the high of this wave 1, which is 3945.86. So it's possible to get these old targets, find support under this ultimate target, and not violate that number. Well, Monday's pattern has the early low. We could still gap up. There is a lower MEJT target. Unless we gap up smartly, it's favored to print. Longer term, I think the June bottom will hold and a new bull market has begun. If it's correct, we should be in a wave 3 up, which is not yet completed. The low 4200s are a reasonable target for this leg. That doesn't mean we have to go higher Monday, though. Rallies which start so far under the 200-day moving average usually need a period of backing and filling before fully delivering on their potential. So even though I think we're going significantly higher, probably a challenge of the old highs as a minimum, doesn't mean we have to go there in a straight line. Shorter term, the volatility index is traded under its lower Bollinger Band, and the SPX printed a bar almost completely over its upper band. These are signs the rally is running out of steam. Now, I don't know if we're going to gap up Monday or not, and if we do, we can continue higher. But I think it's if we don't do that, I'm looking for 41.1593. I think we could have a pullback of sorts here, but we're still in what I'm calling the wave 3 with a reasonably higher target as a minimum. And I think if we do pull back, I'll be looking for places to enter on the long side. I do think the June low is going to hold and that the correction's over. And that is today's call.